Tesla just reported earnings yesterday, and I think it was one of their best quarters ever. It's not because they massively beat earnings or revenue estimates or anything like that. It's because of what they overcame in the quarter, some things Elon Musk talked about, and the fact that they sold their Bitcoin, which I think was just a giant distraction. Let's jump into it. All right, so as always, we lead with transparency and sharing this portfolio. Almost at $69,000. We're up $1,000 today. And Tesla, which just reported, is up 10%. You can see the positions here. This isn't about, buying this hot stock or anything like that. I am just sharing with you what's going on. So overall, we are down $4,500. We have put $73,500 in, and we've made a comeback. All right, let's jump into it. Let's jump into why I think this quarter was so good for Tesla. I wrote a tweet thread about it. You can find me on Twitter at Lieberman Austin. And then you can also subscribe to my email newsletter where I go deeper on all these stocks, austin.substack.com, which is linked down below in the description. Let's talk about demand and pricing, their balance sheet, production, a preview to AI Day, and then why I'm happy that they sold Bitcoin. Okay, so on demand, Tesla does not have a demand problem. We have a production problem. I think that will remain the case. Elon also said we don't want a long backlog. That's annoying. And so the key here is that Tesla has shortened their delivery wait period, which is still really long, but it's shortened. And so some investors were saying, is that because demand is lower because customers aren't wanting to spend as much money? That may be a tiny bit of the case, but their backlog is so long that it doesn't really matter for Tesla. And the reason that backlog and the wait time is shortening is because they're getting better with production. That's the thing to remember. Next point, their balance sheet. So their cash equivalents and short-term marketable securities increased by $902 million to $18.9 billion, which was driven by free cash flow, $621 million, partially offset by debt repayments of $402 million. And then at the end of Q2, they sold 75% of their Bitcoin, which added $936 million to the balance sheet. So more on selling Bitcoin. Elon said they converted Bitcoin to fiat for a realized gain, offset by impairment charges over the remainder of our holdings, netting a $106 million cost to P&L. So Elon said they sold their Bitcoin to maximize cash given the uncertainty of lockdowns. My take is that Bitcoin was just a huge distraction to Elon Musk, whether it had in Tesla, whether it has a ton of upside or not. Tesla is a manufacturing company. They're spending a lot of money opening new factories. They're spending a lot of money on R&D and developing new vehicles. Whether Bitcoin has upside or not, they need liquid assets, and they need to know that they're going to be able to invest at the pace that they need to. So converting a bunch of their balance sheet to Bitcoin would have just been a total mistake. I wish they had never done it, but I'm glad that they're pretty much done with it for now. On production, Elon said they're committed to becoming the best manufacturer in the world. He said that, and that's in the transcript. He believes that that's their strongest competitive advantage, and I agree. They're able to manufacture things so much more efficiently with less space than their competitors, and that's going to pay dividends for vehicle production, solar production, battery production, robot production, everything they do. It's going to help them extend their lead on competitors. They have the world's largest castings, which reduce welding robot count by 70%, resulting in 3 times smaller body shop needed in their factories. Okay, more on production. In June, they achieved production records in Fremont and Shanghai. As a result, they have the potential for a record-breaking second half of the year. They exceeded 1,000 cars a week in Berlin, expecting 1,000 per week in Texas in the next few months. They've hit 40,000 a month overall, and they're confident that they can get to 50,000 a month. I think he said that by the end of the year. Don't quote me on that. So production is ramping up. Tesla AI Day preview. So he talked about this. They're hosting AI Day in a few months, and he thinks that people are going to be amazed at what they're able to show off at AI Day. Basically, there's a tremendous amount to look forward to in the second half of the year. He was really talking about full self-driving there, but also with the robot as well. So let's jump in and let's do a quick just analysis and update. So this is the Everything Money software. I pay for it myself, not getting paid marketing or anything from the team over there. I just put this model in to give you an idea of what some price targets could be. Again, if you want more in depth on this, hit my email newsletter in the description and I go more in depth on this type of stuff. But a frame of reference, right? They've said that they think they can hit 50% year-over-year growth on deliveries for I think the next 5 years, but maybe even the next decade, right? That's extreme to me. So this is a 10-year model. And what I've done is I put assumptions for 25% revenue growth, 30%, and 35%. They could do more than that, but let's be conservative. Profit margin over the last year was 13.5%. I think they're going to get more and more profitable over time. So I gave them 14, 16, and 18 for low, medium, and high. Free cash flow margin, same thing, 14, 16, and 18. It actually might be a little bit lower than that, but whatever. The PE, 25, 30, and 35. That might be a little bit high. Maybe it's low. Who knows? Right now it's 100. It's just kind of crazy. But 10 years from now, I could see it being around 25, around 30. Price free cash flow did the same thing. And then desired annual return, 13%. So that gives us buy prices today that you would buy if you believed these scenarios are going to be true. So low, it means it would be overvalued today. You'd be looking for a 652 buy price, and the stock's currently at 817. So I don't know, 20, 30% overvalued. If that's what you believe, if that's the scenario you believe is going to play out, then you would not be buying the stock today. The middle scenario, you'd be willing to pay $1,200 a share, $1,250 a share today, and still get that hurdle rate of 13% plus returns over the next 10 years. High, if this scenario proves to be true, you'd be willing to pay $2,300 per share today and still get your desired annual return. Hope you liked the video. Leave a comment. Let me know a stock you want me to review. Let me know how I'm doing. Like the video and subscribe to the channel if you want to help support the channel. Thank you.